Hey, so the video you're about to watch right now, I just want to first off apologize before we get into this video because there were some moments I lost it in doing this reaction, and I said some names and I got frustrated and I got emotional at some points in this video, so I just want to apologize for that up front. I try to always keep these reactions as professional as possible, even when I obviously disagree with folks and whatnot. And I didn't do a very good job of that in this video. Now, I'm not going to record the whole video. It's like a 40-minute reaction of several different videos. But I just want to apologize, and I'm going to try to do a much better job in the future of always making sure my reactions are professional and not calling people's names and trying to keep my emotions in check and things like that. So thank you. I appreciate you, and enjoy. Metastock. Everybody and their grandma had an opinion about Metastock here today. Holy smokes, there wasn't no dang joke, because I could have probably had 50 videos to pick from today and to react to in regards to Metastock. Okay, I picked 3. This is a true bet the company moment from Mark Zuckerberg. We'll react to that one and give my opinion. Meta and Alphabet are too big to avoid a global advertising slowdown. I'll react to that one and kind of give my opinion on that one. And then Evercore's Mark Mahaney explains why he's buying Meta shares now. Okay, let me say this right from the go. Wall Street's making one of the biggest mistakes they've made since Tesla stock, to be honest, by basically they're betting against Zuckerberg in this situation, and I think they're making a colossal mistake, and I think it's going to come back to bite them in a massive way, and I think they will, the ironic thing is I think they will end up buying Meta stock a few years from now, and the share price will be massively higher than it is today. And from my outlook, this is just a buy for the next 6 months, as heavy as possible. And, you don't bet against people that have a lot of success. You don't bet against a guy like Zuckerberg that created, one of the biggest social platforms in the world and then had enough intelligence to go buy the next biggest social platform in the world, Instagram, for $1 billion, and then go buy one of the other biggest services in the world from the messaging side, WhatsApp, when that was still a young baby out there, right? And now he's betting very heavily on the metaverse. I wouldn't bet against a guy, okay? You don't bet against guys like Zuckerberg. You don't bet against guys like Musk. You don't bet against guys like Jeff Bezos, Steve Jobs. Those are rare individuals that have proven success time and time again, and they're just really darn good at business, and they really understand this stuff. And Wall Street is clearly betting against the stock. Let me show you how heavily they're betting against the stock right now. This is incredible. Meta stock is down a shocking 71% year to date. Okay. Now, the craziest part about that stock being down 71%, if that wasn't shocking enough, is Meta didn't go into this year overvalued. It went into this year undervalued. Now it's at extreme undervalued. So we have a very interesting dynamic here where usually if you see a stock go down 71% and you're like, oh, it's probably trading at some crazy P ratio and forward P ratio and free cash flow ratio and all these sorts of things, right? Not for Meta. Every single metric going into this year was actually kind of cheap. And now it's just like obviously far, far cheaper at this point in time. So they're making a colossal mistake, in my personal opinion. That's why I stepped in. I bought $10,000 worth here today. And to be quite frank, I'm not done buying this stock anytime soon. This is a buy for the next 6 months, as heavy as possible. They will eventually get it and understand what's going on here, okay? But let's go ahead and react to these. Hope you guys enjoyed as always. I appreciate each and every one of you that subscribe to the channel. I think we're either 17,000, I think we're at like 17,700 subscribers now at this point in time, or some insane number like that. So thank you every single person that subscribed to this channel. It's growing rapidly already, unlike a Meta stock price. Let's watch this. Whoa.
Casey, thanks for being with us. I assume you just heard our discussion. Let me bring up a tweet by Bill Gurley, a subtweet, let's call it, because he didn't specify who he's talking to, but he posted the definition of sunk cost fallacy shortly after Meta came out with those earnings. What do you think here? Is this what Zuckerberg sort of caught in? He's poured so much money into this thing that he just can't get out now.
I mean, it's clear that this is a true bet the company moment for Mark Zuckerberg. And whether you think that this is a sunk cost issue or not, the fact is he's been battered by Tim Cook's policy decisions at Apple around his ad business, and he's determined not to let Tim Cook control his future. So in his
100%, that doesn't hit a lot of people, 100%. And you know what? This is why Steve Jobs was so smart. Steve Jobs tried to keep, when he had a team working on the iPhone, he tried to keep that as under wraps as possible. And Apple's always done a great job of this. I think this is a mess up on Meta's part because now they have to answer all these questions about why you spending so much in the metaverse. They could have probably kept it a little more on the DL and just said, we're working on research and development. But because they're so public about it, you have to answer all these questions. Because I can guarantee you, if Steve Jobs had been super public, a couple of years prior to launching the iPhone, right? He would have had to answer a million questions from people about why are you guys getting into the phone business? You have a successful iPod business and Mac business. The phone business is a hard business. There's no margins in that. What are you doing here, right? You have no competitive advantage. Look at all these other companies that are competing in the phone space, all this competition. He would have had to answer a million questions. So you know what Steve Jobs did? Shh. He kept on the DL. Now rumors got out about iPhone before iPhone came out in 2007 and he showed it off. But the fact was they couldn't really discuss it. And if they even try to bring up iPhone in old interviews of Steve Jobs, what he would do is he'd say, we don't speculate or talk about products that aren't announced yet. And he would just leave it as that, right? And so, Meta's been so public about their ambitions in the metaverse, and I understand, it's a different product, it's a different angle, it's a different time frame, but this is why Apple keeps things a secret, because otherwise you got everybody digging in and saying, you can't do it, this is dumb, you're spending all this money, blah, blah, blah. And it's just, it's something that Meta has to deal with right now, and it's creating an incredible value for their stock, right? But nonetheless, it can be stressful as an executive team to watch your stock just tank and tank and tank 71% a year. That's not easy as an executive because you feel like you're letting everybody down. As a board of directors, you feel like you're letting everybody down, right? Because you're the one that picks the executives of the company.
He has to make the metaverse work for Meta to have any sort of future at all. So I understand why investors...
No, he doesn't have to make This is so stupid. It's so frustrating, man. Oh, gosh. They talk so cluelessly. These folks talk so cluelessly. He has to make the metaverse work to have any future? What are you talking about, brother? What are you talking about? They have 3 billion users on their platforms. Facebook, Instagram, WhatsApp. No, they don't. Metaverse could be never a success, and the company's still going to be here. And it still be a success. And the company's still going to be massive. It's ridiculous, man. But this is the way they talk. And it's like, educate yourself before you speak about a stock, man. It's ridiculous.
Spooked by what they're seeing. But I think that in Zuckerberg's mind, he truly doesn't have any other choice. He either builds the next big computing platform or he's stuck just trying to, optimize an ever shrinking ad market on iOS.
Right. But Julia, there's been this idea that, at least what he's working on in terms of the metaverse has important developments in artificial intelligence. He's spent a lot of money on talent there. Is this something that later on, let's say he is too early to the metaverse or it doesn't turn out the way he expects, that he can pivot all of the research and development they've done to make the core business better?
Well, I think these are two very different things here, right? Because if you think about the way that they're investing in AI for the ad business, Meta has to invest in AI to make ads more targeted and measurable. That's because they've lost all that access to data due to Apple's operating system change. So one of their big...
No, that's actually the smaller part of that. The reason they're investing so heavily on AI is so their recommendation engines can get as good as possible. Because what we've heard from countless folks is that TikTok's recommendations, their AI is the best out there, even potentially better than YouTube's in terms of recommending you content you might be interested in, right? And so for Meta, that's the real reason they're investing so heavy in AI. Ads and all those sorts of things are kind of secondary. They're trying to give you Instagram Reels that are absolutely you're going to be interested in. You're like, oh, I got to watch this. I got to share this. They're having success with that because I could tell you Instagram Reels is taking off in a massive, massive way, right? So they're having success and they're going to keep investing aggressively because the winner is the one that doesn't just have the best content, but can give an individual the piece of content that they're most engaged with, and they pop on there and like, oh, this is awesome. I want to watch this, right? So, YouTube's always been pretty good at that, but I feel like YouTube's not as good as it maybe used to be, which is weird because it kind of takes a step back there. But yeah, that's why they're investing so heavy in AI. It's massive.
Is that type of AI. It's a different type of AI to create avatars with legs, which is the next generation of Horizon World, of really bringing in a sort of more full version of an avatar. So I do think we're talking about different things here. And it's one thing to have Meta innovate on ad targeting, ad measurement, different formats, and another of them to really think about what the visuals are that are going to be compelling for this futuristic world that we may or may not be living in a couple of years. But I think it was so interesting to see some of those chip companies go up on the news that Meta is going to be doubling down on these metaverse investments because it's a whole new world to talk about headsets and all the graphic chips that you need for that. So I just think this idea of Mark Zuckerberg trying to divorce himself from reliance on Apple, how far he's willing to go for that, and how long it'll take to get all of us to a place where we're spending more time in the metaverse.
Yeah, and it's a process. That's the thing. It doesn't happen overnight. Even smartphone didn't take off overnight, right? And I gave this example in the past. I didn't get my first smartphone till, I don't know, it was like 2000, I think it was 2000, either 11 or 2012, years after smartphones had already been coming out. And like my parents, they didn't get their first smartphones until it was probably 2013, 2014, maybe 2015, till my parents got their first ever smartphones out there, right? And so it's a process. It takes time, but the metaverse will touch every single segment of society over time. I was watching a great little MKBHD. He put on the glasses the other day, right? And what showed up in front of him was 3 computer monitors. They all looked like they were there, but there's no physical monitors there. But it all showed up there, right? So that, long term, is going to eliminate the need for actually a physical computer, right? Because it's like, you ever seen the movie Iron Man or Iron Man 2, right? And he's got all the digital things, and he's moving this around and that around, and it's all in a digital landscape, and he's able to do everything, right? But he doesn't need actual physical, like screens and physical products there. And that's what's going to happen over time in, obviously, the metaverse. And every single industry, every single everything will be touched by the metaverse over time. And, there's going to obviously be some folks that build massive companies in the metaverse, no different than as folks that built massive companies because of the App Store. And, game changing, including, guess what? Meta thrived because of that. Google thrived because of, obviously, apps and those sorts of things, right? And the next massive growth lever out there is going to be the metaverse. And I think it's going to be actually a huge fight between Apple and Meta. And so Apple's going to do everything in the short term to try to hurt Meta as much as possible, so they have the least amount of money possible to really invest into the metaverse. That's why they made the privacy changes. That's why they're doing everything they're doing and trying to hurt Meta as much as possible, because they understand, dude, we need to try to put these guys down as much as possible. And it's certainly the move that they made out there. I don't think it's a great long-term move, because they're creating so many enemies, and it's more than just Meta. They're creating Google as an enemy. They're creating, Spotify as an enemy. Anybody is almost an enemy to Apple now at this point in time. So that's not going to be a good long-term thing for a company like Apple.
Casey, it's an extraordinary bet, to say the least, that Mark Zuckerberg is making. And I wonder if you can kind of compare this with Facebook's halting efforts at making a smartphone, which they eventually pulled away from. And I just thought of another potential metaphor for what could be happening here, right? You could be right about the importance of flight in human transportation, but invest in airships and not airplanes, right? Based on your timing and maybe some nuances around the technology. We don't know if Zuckerberg is investing in airships or airplanes right now, and if his timing is right. And I'll leave the Hindenburg opportunity just sort of hanging out there, Casey.
Well, I think it's a good question. One thing that's maybe worth saying, we're just going to know a lot more in a year, right? Because we know that Apple too is trying to figure out what, whether it's building an airship or an airplane. We know that Google is working on something similar like this, right? So there are a lot of companies out there. The difference between Meta and the rest is that Meta is building in public, and also Meta's business is really struggling, right? So I think a year from now, we're going to be able to make some more direct comparisons, and we're going to know, is Meta actually leading the pack here? Is all this R&D paying off, or did Apple spend way less money and get a much higher ROI?
Yeah, and in terms of Apple, they don't really know what they're doing, to be quite honest. They haven't done anything game-changing since Steve Jobs passed away. I mean, you look at the company, they're still running off Steve Jobs fumes all these years later. All they've done is make iPhone a little better. Oh, the camera's a little better, the chip's a little better. Mac, a little better. iPad's a little better, right? They haven't done anything game-changing. They did the acquisition of Beats, so they brought in the headphone technology there, right? Which obviously helped them with Apple Music as well. But there's nothing that company has done that's been like some game-changing product out there, right? That's like, wow, this transformed an entire industry. The closest thing they've had to that success is Apple Watch, right? And by no means would anybody look at Apple Watch in the same light that they would look at, what Apple did to obviously the PC revolution, what Apple did to obviously the phone revolution, smartphones and things like that, right? And the App Store revolution, as well as obviously digital music and the iPod revolution. No one looks at the Apple Watch and is like, wow, that was so crazy. That built this massive industry, right? No, it's not even in the same, thought process of that. That's the closest big success they've had, right? So Apple's still running off Steve Jobs fumes. 12 years since Steve Jobs passed? 11 years, 12 years? And they've done it well. They've done it very, very well. And Apple's been a stock I've owned in the past and done very well with. And they made investors like myself a lot of money in chip stocks like I owned over the years, whether it be Skyworks Solutions or Cruisy Doozy. And so that's been great. But in terms of trying to create the next $1 trillion opportunity, right? Apple's going to have some trouble because you really need a visionary in front of that. Is Tim Cook a visionary? We haven't seen him be a visionary. We've seen him be a great guy at running a huge company that was set up for perfection. Steve Jobs put this company in a place for perfection, right? But the problem is the company Steve Jobs put together, that's good for 10 to 15 years as long as you keep running it. But the problem is as time rolls on, you get to year 20 and year 30, that's where you start to be like, okay, you're starting to run off those fumes, right? And you need to create something transformational that becomes the next $1 trillion opportunity for your business, right? And so, we'll see. Apple's always trying a lot of stuff, but at the end of the day, it's like, you heard it. At one point, they were supposed to compete against Tesla. Are they really going to build a car? I don't know about that. Do they really want to compete against Tesla and obviously all the other automakers? I'm not so sure about that. So, yeah.
Casey, while we have you, last question for you on that tweet from Elon Musk this morning. What do you call that even? Reaching out to advertisers after a lot of the smack talking he's been doing over the last few months. At the bottom line, though, Casey, he's got $13 billion in debt to service. How do advertisers know if this is genuine or not?
Well, I mean, they're going to know it's genuine if they actually get some ROI on their Twitter ads, right? And the problem with that company for a long time has been that the ROI has been terrible. So I'm glad to hear Elon say that Twitter is not going to become a free-for-all hellscape. And I do think that is good news for advertisers. But the company has a lot to do on the product front, on the sort of client relationship front to actually turn it into a meaningful business. So
no disrespect to that gentleman, but you heard what he just said. You spend money on Twitter, you get a horrible ROI, right? In the same interview, he just said that the company's, has no business model if Metaverse doesn't work, right? Where do you advertise if you're a business? Facebook, Instagram, everything else way down after that. Twitter, Snapchat. Oh, are you kidding me? Holy smoke, is that ain't no joke? Is they're like so far behind, it's not even funny. If you are anybody that knows anything about business, the places you go to advertise first are Facebook and Instagram, and then everything else comes after that. Google search is ridiculously expensive. So Google search can work, but that's hard to make a profit because it is so dang expensive, right? YouTube's pretty decent for advertising on YouTube, right? But I still wouldn't put it in the same category that you put Facebook or Instagram in. So at the end of the day, you got to understand who's got the attention in the world and where's the best place. TikTok, Snapchat, Twitter. Are you kidding me? You're going to advertise on those? Have fun getting a horrible ROI. I know so many people that run so many different size companies, small, big, large, mid. I've never heard one person say to me, oh, I'm getting such a great ROI on TikTok right now from ads I'm running. No. If you have success on TikTok because you have organic, means you're getting views organically, not because you're running ads. Same thing with Snapchat. I never had somebody come up to me and be like, us talking about where you're getting a good bang for the buck and say, oh, Snapchat's where it's at, man. No. And Twitter, come on, man. Come on. Let's hope Elon can revive it, but All right, next one up. Meta and Alphabet are too big to avoid a global advertising slowdown, says Josh Brown.
You actually did it. I'm kind of surprised. I know you were teasing.
I know I'm going to regret this.
I know you were teasing.
We bought Meta.
That you might do this.
Wow.
And you actually did. Why?
Yeah. I bought it like 8 o'clock this morning. I didn't buy a lot.
Wow.
It's not that meaningful of a position, but.
Okay, first off, that's what every single person does when they buy something and it's going down immediately after. It's like, oh, I didn't buy them because no one ever says that, to be honest, if it's going up. Like, let's say Meta goes up a bunch. No one then goes and says, oh, I just bought a little bit of that. No, they just say they bought it. Just for future reference for everybody out there. But when it goes down a bunch, then they make sure they reference, oh, it's just small. It's just like 1% of my portfolio. It's just 3% or whatever. It's just natural as humans, right? Because, that's just the way it is, man. I've always noticed that in the market. Even myself, like everybody does it. It's funny how that works, man. Good old JB.
Last night on Closing Bell Overtime, I talked about some of the similarities between this situation and Netflix. And, Netflix's refusal to listen to what the street was saying about doing an ad-supported version to clean up some of the people that would pay for it but didn't want to pay that much, like potential customers, and a new revenue stream. And they said, no. The stock cratered, and then one day they just said, okay, if we're going to do this, how do we do it? And that's, I think, the story behind can we get a chart of Netflix up as I'm talking?
Yeah, let's put that up. And look at that volume just going through there.
We'll take Meta off the screen for a second. The stock never looked back. It went from 180. It's over 300 today.
Josh Brown's like, I bought that thing this morning. It's tanked more. I don't even want to look at it. Please take it off the screen.
It got into that post-earnings gap from the spring, and it is now firmly toward the upper end of the range of that gap. And the only reason that's possible is because there was an about face. Management started to listen to outside voices, and I think that's possible with Meta. Most of Meta's wounds are self-inflicted.
Wow, look at that. Almost a 35% move for Netflix in the past month, while countless other stocks have obviously deteriorated massively over the past month. There's countless stocks that are down 20, 30, 40% in the past 1 month, right? And that's not even near the bottom. The bottom in Netflix was way back in May. Way back in May, Netflix hit, it was like I think it was $170 a share, wasn't it? Or $175 a share for Netflix back in May. And that's why, when it comes to the market, different stocks bottom at different times in these crashes. It reminds me a lot more of the tech bubble crash than the great financial crisis crash. Look at it. No, it was in the 160s. Wow. I didn't realize it quite got down that low. $164 back in May. Right? And now today it's like, 300 or whatever. Incredible move for Netflix. While the NASDAQ hasn't done anything in that time. Actually, the NASDAQ's probably down quite a bit since May 11th or wherever that was Netflix bottomed at. Man, think about that. So let's say 164. So 330. If this goes to 330, you double your money. Wow.
I understand there's an advertising slowdown, and that's cyclical, and Meta and Alphabet are both too big at this point to sidestep a slowdown in global advertising. It is what it is.
That's what I was just talking about on the main channel in my video earlier about Amazon. I was just talking about that because Amazon's so big nowadays, and it's a company that's on a $500 billion plus run rate for revenue, right? And I was explaining how, in the past recessions, whether it be the great financial crisis or whether it be in the tech bubble crash that happened there, the company, it didn't matter even what was going on in the economy, they're still going to grow massively. 08, 09, the company still grew, right? now Amazon's so massive and is such a big company that if there's any deterioration really in their economy, it will hit Amazon's numbers, and it could put the company in jeopardy of actually posting a quarter where they actually don't grow, which is almost shocking to think about in regards to Amazon. It's like ever posting a quarter where they don't grow.
And they're gigantic, and they are they have no choice but to succumb to a temporary slowdown in advertising now. Okay, that's fine. Put that aside. The issues with Meta, the spending, the lack of focus, the lack of clarity, all of that stuff I think is fixable. I'm not suggesting it'll be fixed tomorrow, but I think when you look at a stock that's lost $800 billion in market cap, which by the way is historic. It's never happened before. May never happen again. That is an incredible.
Oh, it will. Apple.
Market cap to lose.
Just wait on
when you look at that, you just say to yourself, okay, so what are they going to do? They're going to keep selling the stock down on the same news. And at any point, is management going to say, all right, let's fix some of the issues here and let's listen to someone besides Mark Zuckerberg's metaverse dreams? Like, I think that there is the potential now for that kind of a turnaround, and that's why I bought it.
Let me just jump in because you've segued perfectly to the very issue of whether they'll make some of the changes.
So I completely 100% disagree with what Josh Brown just said there in regards to the company's not focused. It's not what I hear at all when I heard that conference call last night. They're focused on AI to obviously make Reels as successful as possible. They're very focused on continuing to build out obviously Facebook platform in regards to video on there with obviously Facebook Watch and some of the things they're doing there. Very focused on building commerce with WhatsApp specifically, and basically integrating where companies can use Meta as a messaging service. So very focused on that, and also very focused obviously on the long-term metaverse opportunity. So what I heard on the conference call is actually a company that's very focused, and a company that they're not just spending money to spend money. And they even said on the conference call, they're not going to add to headcount for like the next pretty much almost year and a half. And they could actually even cut employees. So what I saw as a company is actually very focused around cost, very focused around what they're going to do with this business model moving forward. So I think actually Meta moving forward is going to be the most focused Meta we've probably ever seen as a public company, to be honest, because there was a time when it was growth at all costs, and it was like, you could just spend whatever on anything, right? I don't know if you guys heard about the story recently where somebody was just sending Google and Meta invoices in for like $122 million, and they were just sending money, right? There was a different time in those companies' histories, let's put it that way, where they're just like, oh, you send us an invoice, we'll pay you out money. It's supposedly, like, it's just insane to even, I don't know if how many of you guys heard about that story. Let me know in the comment section if you heard about that. It was crazy. But there was I look at Meta as been probably the much more unfocused in the past than right now. I think we're getting the most focused Zuckerberg we've ever seen as a public company. I can't speak to, how focused he was before he took the company public, but I think we're getting the best version of Zuckerberg because his back's against the wall. Everybody's telling him, you can't do this, you can't do that. Sandberg's gone now at this point in time. So I think we're going to get the best version of Zuckerberg moving forward. I think he's going to take his game up to the next level, if in my personal opinion, which is kind of scary because he's done a pretty darn good job over the years. Pretty darn good.
Someone like Altimeter's Brad Gerstner, who wrote an open letter to Mark Zuckerberg and the board, suggested they make, which you alluded to, getting more fit, getting more focused. Well, I've just gotten new at noon Gerstner's first reaction to the earnings meltdown that we're witnessing, and it speaks directly to what you're saying they should do. And
I hate this, man, because Wall Street's like, oh yeah, we told them to do that. This is what they're already doing. If you listen to a conference call, what'd they say? They're getting more fit. They're basically not going to add any employees or add to their headcount for like the next year and a half. Okay, that's getting more fit. They're clearly very focused. So now what's going to happen is over the next few quarters, right? Their Meta's going to give the, suddenly Wall Street will, once the stock starts going up again, they'll say, see, we told them what to do and they listened. BS. They're already making these moves. But Wall Street likes to, pat themselves on the back and make themselves feel good or whatever. It's just laughable. And they did the same thing with Netflix, right? Netflix was already focused on what they were focused on, but Wall Street wants to take that as we did that. We told them what to do. Then Netflix is already talking about going to an ad supported service. You know, it's just hilarious.
They don't really seem willing to do it yet. Here's what he told me. The key metrics of the core biz were pretty good. If he, Zuckerberg, kept spending basically flat, which was expected, the stock is up 10%. If he cut a little more and showed any nod to trade-offs discipline, the stock is up 20%.
So Zuckerberg should now run the company for short-term stock price moves. Got it, buddy. Got it.
He chose little regard for shareholders and went all in with unconstrained spending into the face of an uncertain economy. This isn't about short-term stock moves.
Yes, it
These
is.
decisions materially hurt his own chances of success. No. The best people in the world do not want to work.
The only thing I feel like in regards to Meta that they've done that has been a waste of money, in my personal opinion, is the money they've spent on, obviously, share buybacks, right? Because they spent a lot of money and the stock was obviously immensely more. But I almost guarantee you that's actually probably not Zuckerberg's decision. That was probably more of a Sandberg move and the CFO type move there in regards to share buybacks. I don't think probably Zuckerberg cares anything about share buybacks. He'd rather spend that money on people and systems and kind of what they're working on and stuff that, you know, creates the next $1 trillion opportunity. So that's the only thing, in my personal opinion, that they could have potentially wasted some dough on.
Company that feels like it is continually losing. Altimeter obviously supported major investments in AI and the metaverse. We simply recommended extending the runway on those investments to better match revenue and expense and avoid this huge loss of trust. He obviously disagreed with that, he being, once again, Mark Zuckerberg. So, Josh, given what you said, now given what you hear from Gerstner, this is a show me that you will make some of the changes that we shareholders are suggesting you make. What are your thoughts?
Well, it's very difficult.
Gerstner telling Zuckerberg what to do is the equivalent of me telling Tom Brady what to do. I played quarterback in high school. Brady, why are you throwing a pass like that? It's just ridiculous. This guy is he's not even in the same stratosphere as a Zuckerberg. So the fact that he thinks he can speak up to him and be like, you need to do this, you need to do that, you're not listening to me. Laughable. The arrogance from people is enormous. Like, literally, it's the same as me saying, you should do this. I was a sprinter in college, so it's like me telling, I don't know, Usain Bolt, hey, here's how you should run, buddy. You aren't running quite. Come on, man. Know your role, Gerstner. Who are you? I don't even know you. I don't even know who this dude is. And I watch CNBC 50 hours a day and been in the market for 14 years. I don't even know who he is. Nobody compared to Zuckerberg. Speak up to him. Fool.
When the founder, CEO has all the voting power, and that is the way that this company was set up. It's the way it came public. It's the deal that every long-term shareholder made when they signed on, when they bought the stock. There are other companies in the same situation. However, there are 80,000 employees in that building, and every one of them is compensated with the stock. So this, things that are unsustainable and cannot go on probably won't. So I don't think, despite the fact that he has all the power, despite the fact that Cheryl's not there whispering in his ear anymore, I think at a certain point, the loss in market cap, which, by the way, in reality on the ground is not just a Wall Street story, but it's an employee compensation story. Mm-hmm. It's going to become too big, too obvious, too noticeable to continue to ignore. And so there probably will be some sort of an about face. I don't know when, I don't know what shape it will take. But if you didn't own the stock, I don't own the stock from 300, 275, 210, 180. I'm not in it. So I can come in today and make the bet that this guy doesn't want to burn his own house down.
Right.
It's as simple as that.
Just looked up that Gerstner guy, right? Some VC guy probably inherited a bunch of money, had connections since he was a kid, and thinks he can tell Zuckerberg what to do when he ain't even never built a big company before. Just because you raise a bunch of money as a VC guy, right? Funny money, you think you can tell Zuckerberg what to do is laughable.
Positive on this stock for a very long time, maybe almost back to the IPO. You've had a buy rating on it. That was a smart call for a very long time, but this year has been a different story. What the heck happened, and what you heard yesterday, what do you take out of that? Is that a big dark cloud, or are you still looking for silver linings?
I'm sticking with the buy on it. What I found interesting listening to the call last night is the more that Zuckerberg talked about his investment plans for the metaverse and AI, the more the stock traded off in the aftermarket. The core business, the core advertising business, and it's still 98% advertising revenue, looks like it started to stabilize. If you adjust for currency, you had low single-digit % growth in the June quarter and again in the September quarter and probably again this next quarter. And then as Reels monetization ramps up and engagement continues to rise on the core side and user growth continues to rise and they start recovering some of that lost signal from Apple, you're going to get revenue growth acceleration. And this quarter, I think, was probably the trough margin quarter. So I think fundamentally things get better. The investor question is, can you buy Meta, the stock, if you don't believe in the metaverse? Is that fundamentally disruptive to the investment thesis? And that's a really hard question to answer. I think you can. I think there's a there to the metaverse. I think Meta as a stock is worth more because they invest in the metaverse. Would I prefer that they invest $5 billion? Yes, rather than the 10 to 15 billion that they're spending. But the business is cheap. Their stock is cheap enough that I'm willing to give them a little bit of pass on all that investment spend. But that's really the make or break on the stock. And that's why investors are revolting today. They don't like the metaverse spend.
Yeah, they don't like the name. They don't like the amount of money being spent on it. They don't like the returns they've seen to date or lack of returns, whether that be the audience or what's happening just overall. We talked about this earlier this morning, Mark, and I kind of look at it. I think if Zuckerberg and company were allowed to buy something else, they probably would have. Obviously, that hasn't been the case for a long time. Regulators aren't going to allow them to come in and make another big purchase. So they have to build it themselves. But now you're talking about investment levels that are really getting up there. If it's $9.5 billion or whatever it's been for this year to date so far, I mean, and you're planning on ramping up that spend. I mean, you're talking about numbers that start to look like what it would be for a major acquisition or for the CapEx numbers of something like an AT&T or a Verizon or a Union Pacific. I mean, you're looking more and more like a slow growth company and not necessarily a company that's going to be a really fast growth company.
You're right, Becky. You've set it all up correctly, except, remember, what did we learn about the advertising business today versus yesterday? The advertising business looks like it's stabilized rather than deteriorating. It's actually a little different than Google, but both of these are facing major, if you're in advertising now, these are the dark days. And, at some point, we're going to get beyond this, and it's probably a 12-month outlook. So if you're willing to look out 12 months, revenue growth is almost certainly going to reaccelerate. We think it gets to 20% in the core business, margins rise. That's fundamentally attractive. It gets back to this question about the metaverse. Becky, there is...
real quick, and I think this is important. Every company in the advertising space got an abnormal, massive kind of growth behind them, right? In specifically 2021. And then they have to comp those numbers. That's really tough because you grew way faster than you should have grown in a normal environment, right? So it pushed up your numbers to abnormal levels that it shouldn't have been at, maybe a year or two ahead of where the numbers really should have been, right? Meta was one of those beneficiaries. The other is obviously Google. There's several other companies we can mention, right? But at some point in time, things normalize. You get past those insanely tough comps where you were growing like 40% revenues. And then, things emerge and normalize again. So I think that's important.
Metaverse acquisition to be done. I mean, Facebook is the leader in this market.
Right, but if you were making an acquisition, you could say, hey, Instagram is really hot. It's taking off. I want to buy it. This is, I think the metaverse is going to be hot, and maybe we can make something that people will eventually want to go to. That's a different story, too. There's, a risk-reward scenario if you're buying something that's already hot versus trying to build something and hope it gets hot.
That's absolutely true. So, they're the leader in a nascent space. And so the question for investors is, if you don't like Metaverse, can you buy Meta stock? I think you can. I think the stock's cheap enough to do that. And the core business is, I think, stabilizing. And then that growth in users and engagement, that's the real make or break on the core stock. If engagement is falling and users were falling, you'd run for the hills on Facebook. That's not what's happening. So that's why I'll stick with it. But I get how controversial the investment is in the metaverse. But I think it's a pace or a scale. I think most investors would want them to spend some amount of money. They prefer $5 billion rather than $15 billion.
Yeah, fair. I mean, depends on what you want to buy. By the way, if you want my free stock picking checklist, check out the description area. Might even have it as a pinned comment down there. It's absolutely free if you want me to send that over to you there. But I'm just really frustrated with the lack of understanding from Wall Street on where this company's going. these folks don't even understand social media. I mean, it's an uphill battle, no doubt, in trying to explain these concepts to folks. They don't understand Instagram. One of these gentlemen was talking about, I was watching CNBC. He was talking about, I'm not even on Instagram. I'm not even on TikTok. I don't even understand these things. And that's most of Wall Street. They don't even understand what Instagram Reels, they probably don't even know what Instagram Reels is. I'll be honest. And so when Meta, says, we got 1 billion people, there's 1 billion shares a day of, Instagram Reels. They don't even understand what that means. They don't even understand that concept. And so it's frustrating. The whole metaverse thing is obviously, they have no dreams of understanding that anytime soon. So for that reason, you have to wait till the numbers hit. Until the numbers hit, they won't get it. And that's why I look at the stock as I got at least a 6-month window to add shares for probably very, very cheap, if not a 12-month window. I'm thinking more 6 months, and so I'm going to add very aggressively over the next 6 months. But until the numbers hit, they don't get it. And that goes for all these different stocks, right? For Amazon, several times in its life cycle, people didn't get it. And the stock made some incredible moves down to 50, 70, 90%. And then all of a sudden, the numbers would show up for Amazon. And then it'd all of a sudden get it again. Like, oh, I see what you're doing there, Bezos. Tesla, no one got Tesla until the numbers came through. When did Tesla stock actually start going beast mode? The stock didn't do anything for 5 or 6 years. When they finally started coming through with the numbers and profitability and margins, that's when all of a sudden Wall Street started to get it. And they started to say, oh, okay. And so the folks like us that looked into it and understood this is why Tesla's margins are going to be way higher than a traditional automaker, and they're going to be much more profitable and ... And we understand the EV wave and everything like that, right? We got in front of that because until these folks see the numbers, it's hard for them to understand the concepts behind it. That's just important. Hope you guys enjoyed today's video. As always, I was a little fired up for it, I'll be honest. Way fired up for me. I've usually been pretty calm recently, but this one I was fired up for. Much love as always, guys, and have a great day.